Hi, everyone. For everybody who's joined on, I'm Brittany Quick-Warner. I am the president and CEO at the Eugene Area Chamber of Commerce, and this is our Committed to Community webinar series that we launched last week in response to a lot of the questions and concerns that folks are having about the federal, well, obviously about the crisis, but then also a lot of questions coming from the federal stimulus package, some of the workforce opportunities that have come down as well for the last week. So today's meeting, we're going to chat about the federal stimulus package that was officially passed this last Friday. We have a quick PowerPoint here to kind of break down the different components of it, and then we're going to open it up for questions. So if you don't have your questions answered, please go ahead and send those questions our way. So with that, I will kind of toss it over to Paloma here, and Paloma, you and I can tag team if you have specific things you want me to join in on.
Sure. Well, good afternoon. We're all scrambling to sort of understand what all is going on. So I'll just walk you through sort of the different phases of legislation that we've seen. A lot of people are sort of just calling it COVID 1, 2, and 3. So the first one was just sort of trying to get some cash infusion into various programs that could respond. So some of it was about unemployment, but mostly it was about funding for the economic injury disaster loan program. So that was phase 1 of COVID 1. And then COVID 2, which is going to sort of impacted the most of us most recently before COVID 3, is the Families First Coronavirus Response Act. So I'll go through that in a little more detail, but that is the 2 weeks of paid sick leave and the up to 12 weeks of family and medical leave. A lot of the sort of payroll tax credits, I think IRS and everyone are still trying to figure out. And then there was unemployment insurance provisions in there. So I think we'll have some more time to talk about how the paid sick leave and how the family and medical leave mandates work. So we might hold that if you have questions. I will say that we are still trying to figure that out and how that works with Oregon's existing laws. So that is also still a moving target, but I will say you are required to give posters to your employees by April 1st. Originally, we all counted correctly, but USDOL apparently decided that 15 days really meant 14 days. So they changed the implementation date from April 2nd to April 1st. Posters pretty easy. What I've been doing for my employees is just sending it out through the email because we've got most people working from home. And then COVID 3 is, I think, where we're going to spend most of our time today, and that is they're calling it the CARES Act. That's where it talks a lot about the Paycheck Protection Program, also expands on the Economic Injury Disaster Loan Program, and expands unemployment eligibility. So those are all important factors.
So, you'll go into phase 2 here.
Yeah. So phase 2, that's where we talk, like the biggest impact for all of us is going to be the family leave and the sick leave. So employees can take 2 weeks of paid sick leave. And that includes leave if they need to take it for, if schools have been closed and they need to stay home and care for the children. Interestingly, Oregon's labor commissioner also expanded their definition of family leave under the Oregon Family Leave Act to also include leave for childcare needs. It applies to all businesses with fewer than 500 employees. There's no bottom threshold. So I think we're all used to Oregon's paid sick leave or the Oregon's unpaid Family Leave Act that has a bottom threshold, so a minimum number of employees. This does not. So it applies to everyone with fewer than 500 employees or 500 and fewer. So that is a tricky thing. The USDOL just put out some new guidance about how the family leave and the sick leave work together. So combined, it's a maximum of 12 weeks.
So
Now,
the way that I understood it, because we're obviously working through this for our employees as well. So starting
yeah.
April 1st,
Mhm.
folks can use the 80 hours of paid sick leave if they're sick, if they if the employer thinks that maybe they need to be seen by a doctor, they need to have that sick note. They need to be able to prove that they've been pursuing a medical kind of diagnosis, if you will, in order to use it for sick time. If it's for employees who have the kiddos who are at home, they're eligible for that 2 weeks as well. And then you have the additional 10 weeks that can be paid through the Emergency Family Relief Act as well on top of it, right? Is that how you
Right.
understand it? Okay.
So we have, I have a call with the labor commissioner this afternoon to clarify sort of how did all of these pieces work together with our Oregon leave laws
Okay.
and with the existing Federal Medical Leave Act, Family and Medical Leave Act. The payroll tax credits, from what we've been told, they're working on it, but they haven't clarified as much. There is a maximum benefit of 511
Yeah.
a day, and so the tax credit is only up to that amount. So if you pay your employees 100%, and they make more than 511 a day, you don't get a tax credit above 511, but you do get a tax credit up to 511.
Right. So just to kind of recap that, if folks are using the new sick leave, you are eligible as an employer to get reimbursed for the cost of that paid leave via payroll tax credits. So they've said that starting April 1st, you can start to hold back on paying those payroll tax credits. You can hold back on paying those payroll taxes, and then that will count as kind of your credit for that. And then they're going to start to kind of true up whether you need more funding in order to cover it or not. So,
Right. So USDOL also issued guidance, I think yesterday, about the 50 and under exemption for the family leave. So what they've said is if you have under 50 employees, instead of creating this sort of exemption process, you will be exempt with regards to the leave for childcare purposes. The other provisions are somewhat less clear. So we're still working through all that guidance. I was actually just scrolling through it before we got started.
okay.
So I haven't had a chance to digest all of it, but that's what we know for sure.
Great. Okay. So then phase 3 here.
Yes. So this is the loans program. It's the Paycheck Protection Program, which is important because it's forgivable loans, which essentially would mean that you would not have to pay them back. It also sort of extends the EIDL loans. So I think where a lot of people were focused on this legislation originally had less to do with the small business loans and more to do with the sort of cash rebates. So you'll see on here, but it's $1,200 for an individual, $2,400 for couples, and then you get an additional $500 per qualifying child. It starts phasing out for individuals over 75,000 and couples on over 150,000, and then phases out altogether for anyone who makes more than 99,000, or for couples that make 198,000. And they expect that they're going to try and get those out the door just as soon as possible. So that's where the rebates are.
The way I understand that is, oh yeah, you have it here. Based on your 2019 taxes, if you've already filed them, otherwise they'll go off your 2018 tax tax filings.
Yeah. And then extending the business tax deadlines. Now, important probably for, at least for my organization and for the chamber, they did not clarify that those tax deadlines were extended for nonprofits. It's just for individuals and corporations or businesses. So if there's anybody on here who has a nonprofit, talk to your accountants.
Okay. Good to know.
Because those deadlines may not have been extended, and you may just need to ask for an extension. That's what I did. So, but it also, the phase 3 delays payroll taxes. Again, we're still waiting on some more guidance about what that looks like. We just know generally information. And then there's an employee retention credit. If you keep a certain percentage of your employees on staff, you don't lay them off, you get a credit for that. There's various other technical fixes regarding taxes. Again, more details coming. I will endeavor to keep everyone informed as we know more. The retail glitch had to do with retail and restaurants in the previous tax packages that have been passed, the tax cut bills. So it's sort of more of a technical fix than anything.
Okay.
And then I think, interestingly, it expands unemployment insurance eligibility for independent contractors, business owners, and anyone who would consider themselves to be self-employed.
Okay. All right. I know we'll have some questions about that one, but we can circle back around to that when we get done here. Okay. So we're going to go into these 3 main areas of financial support for small businesses and for nonprofits that are eligible. A lot of folks have been hearing about the Small Business Administration's disaster loan. Oregon became eligible. All states actually are eligible now for that disaster loan application. There is a grant that has been attached with this disaster loan through the CARES Act. And then we'll talk a little bit about the payroll protection program which is also a loan program with a portion of it being forgivable, that they also announced with this CARES program.
So the EIDL program will provide about $2 million. So it's sort of, if you just need like an immediate infusion of cash. For businesses, the interest rate is 3.75. Also attached to this is the grant eligibility of $10,000. So there's sort of complicated rules around that. Again, I would talk to your accountants. So the eligibility requirement has sort of been simplified to be able to get access to these loans. They've expanded who is eligible for them, and have also sort of limited, you don't have to look for have credit elsewhere. You don't have to deal with that requirement. So the loan approval is based exclusively on, sorry, screen changed. Is based on your credit score. And then if you have if you just need a very small, well, not very small, but $200,000 or less, doesn't require a personal guarantee. And they will, there's a 6-month grace period on that one.
Okay. So, yeah, the grant portion.
Yeah, so the grant, people can get the $10,000 grant. When talking to your accountant, I'm sure that they will have dived into this, but it requires, it sort of gets combined in with the calculation on the loan. When it comes time to figure out how much you're going to have to pay back. So that would allow people who just need some rapid cash in the door. And it is a forgivable grant.
So the way I understand this, and correct me if I'm wrong, Paloma, so the emergency injury disaster loan program, you apply for that loan through the SBA's website, so sba.com.
Right.
And through that one single application, you can then say that you want that $10,000 grant to come through within the next 3 days. Is that right? It's not a separate grant you're applying for.
Right.
Okay. So that's what I want to clarify, because that was one thing that was unclear to me in the beginning. So if you're looking for this $10,000 forgivable grant, which they supposedly are going to issue those checks within 3 days of submitting your application for it, they will go through the process of identifying if you're eligible for the loan. But regardless of your eligibility, if you indicate that you want that $10,000 grant, they will send that, and it's forgivable. So even if you don't get qualified for some reason for that SBA disaster loan, that grant funding is still forgivable, and you'll be able to receive that $10,000 check essentially to help with some cash flow, which is what a lot of businesses are struggling with right now.
Yep.
Great.
So the qualified expenses that are qualified under EIDL and the Paycheck Protection Program are going to be pretty similar. So it's the cost of payroll. So what it costs to maintain people on payroll. If you need help paying rent or mortgage payments, paid sick leave, which is a little bit different from the Paycheck Protection Act. Obligations. Now there's a limit on when those debts can be incurred, and whether or not you can use these loans to pay for them. They can't be sort of old debts; they have to be new debts, essentially. And then what is different about the qualified expenses under EIDL is that it also allows for using the funds for increased costs of materials or supply chain interruptions. I know a lot of businesses are trying to sort of get ahead of this or find new suppliers, or make sure they're stocked up. So that would be a good use of the EIDL loans, I think.
Great. I have a couple questions here specific to these pieces, so I'm going to pop those in right now. So Alicia asks, are there stipulations about who the $10,000 grant is forgivable for, or is it forgivable for anyone who applies?
It's anyone who's eligible for the loans. So if you have under 500 employees, then it would be forgivable.
Yeah.
Forgive grant.
Great, thank you. Let's see. Someone asks, can you, let's see, from Seth Revol, is there no personal guarantee on the EID loans just if it's under 200,000, or is it on the first 200,000 of larger loans as well?
I think it's just under 200,000.
That's the way I understood it as well. Seth, a good person to chat with about that is someone who offers those SBA loans locally, and there's a couple different banks who do. I know specifically over at Summit Bank, they have a staff person who might be able to answer that specifically. But I am under the same assumption as Paloma that if your loan that you're asking for is under $200,000, there's no personal guarantee. Okay. So we'll carry back to some of these other questions that have popped up here, but I just wanted to make sure to get those answered because they were related to that. Okay, so the Paycheck Protection Program.
Yeah. So this is the loan program that's probably going to be most beneficial to the most number of businesses. So it's for businesses with less than 500 employees. It includes nonprofits, but only 501c3s or veterans assistance organizations. And it also includes, so there's sort of some clarifications around franchises. So if you had an individual who owned multiple McDonald's franchises, let's say, all of the franchises that that person owns would be included in the 500 employee count, but not sort of all of McDonald's.
Okay.
And then there's an accommodation for and food service language that just says per location if you have fewer than 500 employees. I think that's just to make sure that most restaurants are going to be eligible for this benefit because we've seen so many of them hurt so badly by this.
Yeah.
And then importantly, sole proprietors, independent contractors, and self-employed individuals would also be eligible. We continue to work with U.S. Chamber of Commerce to get this change, this fix on the 501c3 nonprofits, because so many of us are actually C6s.
Yeah. The irony of all the work that our chambers are putting into educating businesses, and then we aren't eligible.
Yeah. So the businesses have to be operating on February 15th of 2020 and have had employees, I think. And then I think on the next slide, probably we'll get to how this all works in terms of calculating and what you can use it for and all that stuff.
Great. I had a question come up here from Angie Marzano. What about independent contractors? So the CARES Act, Angie, made eligible independent contractors for both the disaster loans and the Paycheck Protection Program. So independent contractors, sole proprietors are eligible for both of these programs now.
Mm-hmm. And they're also eligible for unemployment.
Yes, and eligible for unemployment. Thank you. Okay.
So to calculate how much you can borrow, this is going to be sort of tricky for some folks, easier for others. So it's 2 times the monthly average payroll, but it's tied to a specific date. So you would look back into 2019 and look at your average payroll, I think over 3 months. Nope, it's right there. February 15th to June 30th. So you would look at that, do a calculation of what your average monthly was, and then do it times 2.5. So it's the same calculation, it's just a little different for seasonal employees. What we've said to lots of folks is you're going to have to make sure that you've got the most documentation on this because it also is tied to whether or not your loan is forgivable. So if you get the loan, what you spend it on, you need to really document very carefully.
Yeah, and I'm going to move this really fast because I have another document that does a good job explaining. Too many documents up. I don't know if everybody's seeing on my screen or not right now.
No, at least I'm not.
Okay, if I can't find it, we'll be sending out a ton of information following this, with a little bit more detail about what can be used. So sorry about that. I'll switch to the next one now. Okay.
So just a quick thing, if you had a business that wasn't in operation on February 15th, 2019, you would do the calculation. Let's see. You would do the calculation from January 1, 2020 and ending on February 29th, 2020, multiplied by 2.5.
That's if you weren't in operation last year.
Yeah, if you weren't in operation last year and you're trying to be eligible.
Okay.
Then loan payments will be deferred for at least 6 months, up to a year. Now, again, a lot of these are going to be forgivable, as long as you can document that you've spent the money on the things that they want you to spend it on. Guaranteed the interest rate will not exceed 4% is what they've said. And how you apply for these loans is through your bank. So as long as they are an SBA authorized bank or credit union, you apply directly through the bank to the bank. SBA guarantees 100%. So they've also removed the need for collateral. And I don't think this is going to be a big problem for a lot of people, but there's no prepayment penalty.
So if you pay it off early, you're all right.
Yeah.
Okay, so
this is going to be an issue.
Yeah, there's a couple questions that popped up, which I think are being answered in the future slides, but if not, we'll circle around to them.
Okay. So particularly if you want these loans, you need to use them for payroll expenses, retaining employees, mortgages, and utilities. Now, sort of going to quickly address one question that I saw pop up. So you can be eligible for both an EIDL loan and a PPPL loan, but you can't use the funds for the same purpose. So you would want to figure out how to separate out those funds, how you're going to track it, and make sure that sort of you're deciding EIDL is for rent and outstanding debts, and PPPL is for payroll and health insurance and all those sorts of costs or something along those lines. Again, I would talk to a financial expert.
Yeah.
I occasionally am an amateur one on accident, but I'm not one. And then, so just wanted to flag that quickly. And then it can be used on any expenses incurred between February 15th, 2020 and June 30th, 2020. The application process is going to be pretty straightforward. You're going to have to say, I have less than 500 employees and I am having financial difficulties. And that's about it.
Great. So this part is important. This is covering the loan forgiveness for the Paycheck Protection Program.
Yep. So you need to be able to show that you've used this for payroll costs, for mortgage, rent, and utilities. I think most folks are probably going to need to use this for rent and payroll costs. Mm-hmm. The payroll cost also includes health insurance costs. So, but what's most important is documenting everything. You're going to want to be like way more careful and more detailed than you'd ever been. For my purposes, if I were eligible, I would create a whole new file where you're duplicating everything that you do normally in terms of tracking payroll and sort of tracking funds. I would keep these funds separate so you can track them. But you would choose, and the nice thing is that they're letting the business owner choose the period in which you're counting. So
right. So I want to clarify this. So the Paycheck Protection Loan runs through, it's covered February 15th through June 30th. 8 weeks of that is eligible for loan forgiveness. So if you take out a loan for that entire time, only 8 weeks of it is the forgiven period. So I think that's important to know whenever you're looking at how much is going to be forgiven. But they do let you pick which 8 weeks. So if you have business that kind of ebbs and flows and costs that ebbs and flows, you can kind of pick that 8-week period that you're able to get the most back for it.
Right.
So there's a couple of things I wanted to add in here. Someone asked about, is the business owner's salary covered or just employee salary with the Paycheck Protection Loan?
Business owners is, as long as they make under 100,000. So employees over 100,000, salaries over 100,000 for employees or for the owners don't count.
Does it count up to 100,000?
Yeah, it's up to 100,000.
So if someone made 105,000, 100 of that would be eligible and the extra 5 wouldn't, or does that employee completely knocked out?
I think that employee is completely knocked out, but
we should
still
look
trying to figure that one out.
Yeah, I'll write that down as one to follow up on because I don't actually know myself. Yeah. So how does part-time as opposed to full-time work on calculating payroll?
So it's just what they were paid. So you would base it on sort of what is the cost of that employee, payroll, health insurance, all in, over the period in which you would calculate it.
Yeah. So
it's not hours, it's pay.
Right. So in what I understand is it's their average.
Yeah.
So if it's a part-time employee that kind of has ups and downs, you take that average payroll cost, and that's how you would calculate it for part-time folks.
Yep.
Right. Let's see. How do I determine if a parent company is a joint employer and can count all subsidiary employees in aggregate to get above the 500? Oof, that's a tough one.
So generally, it's about joint control when you are trying to figure out whether or not there's a joint employer relationship. I would tell you that there is guidance specifically in this in the new USDOL FAQs. And I could read it to you, but it might be easier to just look at those because I just sort of briefly scanned it this morning. I haven't had a chance to really dive in.
So we will circle back around. Since I have my screen shared, I can't see who actually asked that question, but assuming it's from Facebook, I'll circle back around and give you a link to where we can get that question answered for you.
Yeah. And we, OBI has also been sort of steadily building our website, our sort of coronavirus website of links, and we'll have that available on our website also.
Okay. Someone asked, does it have to be 8 weeks continuously, or can it be a week here and there that totals up to 8 weeks?
Generally, I would say it needs to be 8 continuous weeks. That's how most of these are handled.
Yeah.
Yeah,
We'll
I don't
jot
think
that
they'd
one.
let you pick and choose your 8 weeks.
Yeah, I was gonna say the same thing. We'll jot that one down too, just to circle back up on it. But I would probably bank on 8 continuous weeks. Okay, I'll let you keep going on your PowerPoint, and then we'll come back around to the questions.
Yep. Okay. So we basically covered this already. There will be a list on SBA's website, they've said, of approved lenders that can participate in this program. So I would check there. Or if you already have a relationship with a bank, I would call them and just ask if they are a lender for Title VII,
Great, and
for
we'll
SBA 7 program.
yeah, we'll put a link on the follow-up notes from this with the SBA eligible banks for our region. And there could be some extra coming online because with this opening up, they're allowing some other lenders to be online as well. One piece that I'm not sure if you touched on this, Paloma, or not. I'm reading notes from a webinar I was on this morning, so we can be helpful. So with the Paycheck Protection Program loan, loan payments, including the interest, will be deferred for at least 6 months and up to a year. So if you are taking out that loan, you get your 8 weeks of forgivable funding, and then the additional portion that you take out, you'll have from 6 months to a year before you have to start paying back on that loan.
Yep.
Okay. Oh, this is a double up
I think
slide.
we covered this already.
Yeah, whoops, sorry. Okay, so we'll talk a little bit more about the emergency leave, and then we'll come back around to some questions.
Yep.
Okay.
Okay. So to clarify, the paid sick leave, so for full-time employees, it would be 80 hours. For part-time employees, it's whatever is equivalent to 2 weeks of their work schedule. So it includes paid sick leave when you've got a quarantine or isolation order, but the business is still operating. A healthcare provider, so the doctor told somebody they need to quarantine. If you are experiencing symptoms and making an effort to get medical verification, so I think that would require some communication between employers and employees. Caring for a quarantine family member. A lot of this is sort of similar to Oregon sick leave law. It's just expanded for this purpose. And then caring for children who are at home. Now that means if the school is closed or the daycare is closed. This is a big expansion for all of us to sort of adjust to. And then other similar condition, which as an employment lawyer terrifies me. Yeah.
So this paid sick leave, this is the 80 hours that folks are eligible for. And then the emergency family medical leave is the additional 10 weeks. So a total of 12 with both of these programs together.
Right. So interestingly, with the emergency family and medical leave, BOLI, as I mentioned before, amended their definitions of sick child leave to include leave when your child is home from school because the schools have been closed. But this emergency family and medical leave is 10 weeks. Similar, so unable to work because of caring for a child because the schools are closed. The difference between the emergency family leave and the sick leave is that the sick leave is full payment, full wages, and the emergency family and medical leave is 2/3 of their rate of pay.
So a couple questions that got answered last time we talked a little bit about this. This can be used kind of in portions. So for instance, we were talking about our staff. We have a handful of staff who have kiddos who are home from school, and they're talking about, what if I do part-time work and then part-time sick pay based on the fact that I can make sure I'm with my kids half the day and the other half I can be working. And you're able to do that through this program. You can extend that that 10 weeks by having portions of the pay covered by this.
Yeah, so that's intermittent leave. It does require the employee can't just decide they're going to do intermittent leave. The employer would have to agree.
Right. Yeah.
So that's an important factor,
Yeah,
because for those of us who are accustomed to working with OFLA or FEMLA, well, OFLA is the only one that has intermittent leave, we would sort of, it's up to the employee to decide they're taking intermittent leave. In this situation, it's the employer who gets to decide whether or not that's happening.
Yes, thank you. All right, and the last page on notification requirements, and then we'll circle around to the questions.
Yes. So I mentioned this before. The poster is available. It's on the USDOL website. If you just search for the FFCRA poster, it should pop up. Also linked down below and here.
And we'll put that in the comments too.
Yeah. So poster has to be provided by April 1. Normally we would, post it in the copy room or the break room or wherever. For my purposes, if you have an intranet, they said you can post it on your intranet if that is easier for you. I just emailed it out to all my folks.
Great. Okay, so I'm going to come off screen sharing here. We will be sharing this information with you guys. This PowerPoint, we're also putting together kind of a small business guide for all of this. So I'm going to stop the share so I can come back to the screen and I can see everybody's questions. Okay. I want to make sure to pull up the Facebook as well so I can get those questions answered too. Hi, everyone. Thank you all for sticking around. And I believe Brett is still posting questions into the chat. So let's get this, pop this out. Okay. So we have a question from, let's see here, from Jacob Pace. How does EFMLA work with self-employed gig workers?
So the thing about EFMLA is your employer is paying for this leave. Gig workers don't have employers. So if they are out of work due to isolation or childcare or all sorts of those sorts of issues, they should apply for unemployment. The unemployment benefits have increased. They've added some more funding into that, but that is the best way. And unemployment insurance has been, Oregon's rules have been amended to allow you to do that.
Great. Okay. Let's see here. From Cami, how would the paycheck protection or the unemployment, or excuse me, the FMLA or paid sick leave work with WorkShare, Oregon's WorkShare program? I don't know if we've looked into that yet.
So I would say generally it couldn't be both. So, well, let me rethink this a minute. Yeah, no one's really figured that one out. I don't even think The employment department has thought about that.
So given this is a brand new rule, I'm not sure, Cami, if folks have thought that all the way through. So we will research that question today and get you an answer to that one. Let's see here. Sean asks, what if an owner takes a draw and is not a W-2? Can you include the draw?
For calculating the loan payment?
Yeah, I assume that's what that was referred to.
Yeah, because it says, I would interpret it to say yes, because they've included self-employed.
Okay. Okay. I'm going to go back through to the top to make sure I didn't miss any here. And I know I have some more at the bottom here. Someone else asked about the work share program, if the new federal relief package will reimburse those folks. I saw that the federal funding has been set aside to compensate wages under the program, but it doesn't specify how. How would work share employees be eligible for, would work share employees be eligible for a percent of the $600 per week in additional unemployment that the government passed?
Only if it, so if under work share, if unemployment is already covering your part of your wages and your employer is covering the other part, there's not really a hole in your wages. If there were a remaining hole in wages, then yes, the new unemployment would fill that hole, but it's only up to your regular rate of pay.
Okay. Then, and I had that question too about the extra $600 per week. Is that just up to your regular rate of pay as well, or is that $600 flat?
No, I had the same panic idea, and I talked to the employment department on Friday, and they said, no, it's just up to your regular rate of pay. It just bumps you a little bit closer to a full wage replacement. Again, lots of people aren't going to get anywhere near full wage replacement, but
okay,
it just bumps it up.
All right. And just so you guys know, this webinar will be posted later today on our website. So if you need to circle back around and look at anything, Casey says, if we have less than 10 employees and that makes us exempt, are we still required to send the letter to all of our employees?
So there's no exemption under 10 under the Families First Act. So you do have to send it to all of your employees. There are sort of some narrow exemptions under 50, but it doesn't exempt you from the law entirely.
Okay. So yes, Casey, we would encourage you to still send it out. And with this new federal law, nobody's exempt, but you do get the reimbursement from the state for those fees, or from the federal government. Yeah. Ty Buchanan says, can you explain the net operating loss carryback? Ty, have an FAQ that explains that really well. So I'm gonna, because that one's a little bit more nuanced, I'm gonna follow up with you after this call on that. And if other folks have that same question, we'll try to circle around and get that answered in our next webinar. Okay, let's see, other stipulations. We already answered that. Is the EIDL completely separate loan from the Paycheck Protection Loan?
Yes.
Yes. You are able to do both. If you already applied for a small business disaster loan and you want to roll it into the paycheck loan instead, you are able to do that as well. So in the links that we send out, we'll send the Small Business Administration link that explains how you can do that. But you are able to apply for both. Okay. Sorry, everybody, I'm trying to make sure I don't miss any questions here. Someone says, verifying I understand this correctly. The Families First Act requires employers pay the employees, but funds can be covered by the PPPL or the EIDL loan programs. Is that correct?
Yes.
Yes. Okay. Does the 2 weeks kick in only once all other paid leave has been exhausted?
So this is, no, that's the answer. No. USDOL's FAQs are interpreting this to be on top of existing leave.
Okay. So someone say my staff has 40 hours of leave that we already pay them. They don't have to use that first. They can use the
Trying to still sort of understand all the ways in which the USDOL is interpreting this.
Okay.
And again, I would direct people to their FAQs but my interpretation is that they are arguing that this should be in addition to leave that you are already providing.
Okay. Again, we'll circle back on that one and try and get that answered. Okay, so Vicki Gray, what about a business that was not in existence for the look back period, but was a business on February 15th?
So for that one, you would look at January 1st, 2020 through February 29th, 2020.
Okay. So it looks like they would have had to been a business by January 1 then.
That's what I understand.
Okay. All right. And we'll verify if that's wrong. Vicki, I'll get you the right answer. So for the Paycheck Protection Program, after the 8-week June 30th eligible period ends, how does a business pay for forgiveness or apply for forgiveness?
So I think you would pick when you are applying for forgiveness with your, I'm assuming there will be new documentation provided to banks to share with their customers. You would select your 8 weeks. So it's not, you don't time it. You apply for forgiveness and you show them the 8 weeks you're asking for forgiveness on.
Okay. Great. And so that, again, the PPP loans go through SBA lenders, which are local banks in your community. The emergency disaster loans go through the SBA's website, which is sba.com. John Ruiz, will we get a copy of the PowerPoint? Yes, we will. And the hyperlink is also in the comments here, and I'll make sure to send that to you too. Thanks, John. Josie, I would like info on how the programs affect Workshare. Awesome. We're going to get that out. That looks like a question that a lot of people have, which is good because it sounds like people are using that Oregon Workshare program, which I think is a great resource for folks. So can you clarify?
So I did ask this question somewhat of how do all of these programs work together with unemployment. They were not sure when I asked them.
Okay.
But I'm happy to ask them again also.
Okay. So as soon as we can get that, we'll get that out to you.
Yeah.
Can you clarify the waiver of affiliation rules for franchises under the PPP? My understanding is that the affiliation rules are waived only if the franchise is registered with the SBA. I had not heard that they had to be registered with the SBA. So I don't know, it just showed up as anonymous attendee. I'm not sure who that was, but everything that I've read, I haven't heard anything you have to be registered with the SBA to get that franchise waiver.
No, I mean, there's a category that's already sort of allowed in the program because they're already registered with the SBA, but this is vastly expanding that universe. So I wouldn't think that that is a requirement.
Okay, let's see. I work from home in a personal insurance business. Sales revenue is down because of the virus. Is there any opportunity to reimburse for down sales? Considered a contractor, independent insurance agent for a company that is based in Arizona and has national coverage.
I believe pay in the, or compensation in the provisions of the law includes commissions. So I'd imagine that that would be also be covered.
Be covered. Okay.
Yeah. They'd have to figure out sort of what is your average commission amount and do that. But
Someone asks, if I use a temp service for employees, can that be included in the payroll costs?
I don't think so.
I don't either. I think that the
Maybe EIDL?
yeah. We'll check on that too. From my understanding is if the temp agency is paying out of their payroll, they would be the one eligible for those employees. But let's verify that one. All right. I'm going back over to the comments. For employees laid off prior to April 1st, do they qualify for the COVID-2 leave payments?
No.
No. So and this is what I understand, and correct me if I'm wrong, Paloma. So if you laid off an employee prior to April 1st, they are eligible for unemployment, and they should be applying for unemployment through the state. The state has waived their 1-week wait period. So they should apply right away. The federal government is providing additional unemployment benefits to try and get that employee back up to whole, as far as the benefits that they'll receive from the unemployment. However, if you decide to rehire your staff back on, these provisions help to make that work for the employer. Does that make sense? So one of the reasons they're putting this in place is to try to encourage employers to bring those staff back, because we know a lot of folks had to be laid off before April 1st. So if you are able to bring them back, then you can apply for some of these funds. Is that right?
Yeah.
Let's see here. The one that we did not touch on is the employee retention tax credit. Let's see here. So this is the one where I feel like it benefits folks who bring their employees back on. So the employee retention tax credit, and again, we'll include this in our Q&A that we send out. It's a credit against payroll taxes for businesses that are closed or that have lost 50% of revenue compared to their first quarter last year. So if you lost a significant amount of revenue in Q1 of 2020 compared to your revenue last year, if it's more than 50%, then you are eligible for a tax credit to help retain the employees that you maybe would have otherwise had to lay off because of that reduced revenue. So keep an eye out for the document that we send down the road for that employee retention tax credit element that's included in this. Okay, someone asks, does Governor Brown's stay-at-home order equal a government mandated isolation order?
So this was weird in the FAQs because I would have thought yes, but what the FAQs from USDLL said was when they talked about quarantine or isolation order, they meant an order specific to that individual, not sort of across the board.
Yeah, so the way I understand it is that the governor's mandate is not actually equivalent to the isolation order. Sean asked, do you have to keep employees on for 4 months to not have to pay back the loan? I'm assuming she means the Paycheck Protection Loan. I don't know if I saw that answer in the Q&A that I read or not. Let me look into that one for you, Sean. I'm not 100% sure on that one.
Yeah.
Brian asks, are 401k normal monthly contributions, employer and employer match, covered in Paycheck Protection?
Yes.
Yes.
It includes retirement.
Oh,
expense.
okay. Okay. So the answer is yes, Brian. Okay, we are a little bit after 1 o'clock, and it looks like maybe that's all my questions. Cami says, okay, let's see. There's a lot more questions on Facebook here than I'm following. This is a good question that I don't know if we have an answer to yet. So unemployment claims began the week of March 16th. A lot of folks in the restaurant industry were forced to stop on-site service that week. No one had their waiting week waived. Will the unemployment department be retroactively paying the waiting week, or did all of the service industry employees just get screwed?
So everyone will get, so it's not so much, the waiting week essentially what means that, so let's say you have 26 weeks of benefits. You don't get that first week, but you get paid that first week on your 27th week. Okay. So it just will put it to the end instead of at the beginning. We've begged the employment department to fix this, but they said our computer system is incapable of being fixed and it would take so much longer to actually do it that way. So
okay,
that's what they're doing.
Eric asks, do the employees need to do meaningful work if brought back on?
Meaningful work?
I think that if you're bringing them back on and you're putting them back on your payroll, you're the employer and you get to decide what they do.
Yeah, I mean, if you want to pay them to just sit in an office there,
yeah,
that's up to you.
Yeah. Cami says, do I understand this right? I can get $10,000 grant through the disaster loan and paycheck protection for 8 weeks. If someone is using emergency leave or sick leave, would that be reimbursable from paycheck protection?
Yes. That would be one of the expenses that you could get forgiven.
Okay. So yes, Cami, you can do both. You just can't double charge your expenses. So Paloma's recommendation was to very clearly delineate which expenses you're going to get reimbursed through the disaster loan and which ones you're going to get reimbursed through the payroll protection program. So say you're going to put all of your payroll funds or all your payroll fees through the paycheck protection and then do all of your rent and mortgage and whatnot through the other one. So the recommendation is that you are very clearly delineating those and that you document everything in this period. All right, I have a couple more questions that popped on. Thanks to everybody who's on here. I know people have to go, but we will have this recorded and posted online. Let's see here from someone. If an employer laid off employees several weeks ago, can they bring them back on as employees, and would they qualify for EFML if they have a child at home? Yes. Yeah. My understanding is as soon as they're back on as an employee. However, the paid sick leave portion is eligible on day 1 of employment. The expanded family medical leave, I believe an employee has to be on for a month. Is that right?
Yeah.
So we might need to clarify if they already worked for you for a month and they come back on, if that time has to start over. I think it might have to start over in order for them to be eligible for that one, but they can immediately get that first 2 weeks of paid sick leave. So we'll clarify that. Someone just said Paloma is my favorite drink. I'm gonna wait till 5 p.m. to make one. I kind of feel like maybe it's work from home. You can sneak that drink in by 3. Don't tell anybody I said that. Okay, let's see here. I think that maybe that was all the questions. I just want to reiterate to folks that we're going to have this recorded. We're going to post it back online. And my amazing staff have gone through all of these webinars and documented all the questions that are asked and the answers. And we're working on getting those documents put together so we can send them back out to folks. So if we didn't get your question answered, I apologize. We're kind of flying by the seat of our pants, as I feel like most people are who are trying to navigate the situation. So we're going to go ahead and get as many questions answered in the next couple of days as possible for you, and we will do our work to follow back up. So any closing thoughts, Paloma?
Yeah, so a lot of these questions, I think everyone is sort of struggling with. A lot of the employment lawyers that I work with are struggling with. I'm going to try and have another conversation today with the labor commissioner and some of her staff. Hopefully we'll have some answers.
Okay.
And we're also going to sort of collectively be gathering questions to send to USDOL. So
Great.
feel free to share those with me or all y'all at the chamber.
Yeah, thank you. So for those of you who don't know, the chamber has on our webinar site, you can actually, we have a form that you can submit questions that you have. So if you had a question that wasn't answered here, feel free to submit them through that form, and we will go back and try to find answers as staff and get answers back out to everybody as quickly as possible. So a big thanks to Paloma, and just a shout out to the Oregon Business and Industry. They're a statewide business advocacy coalition or group that has been working diligently on behalf of all the businesses across the state. Our chamber has partnered with them to advocate for a couple different pieces that are going to the state legislature. They are going to most likely have a special session starting sometime soon where they're going to consider, who knows when, they're going to consider a couple different elements. One that we're advocating for strongly, and I know OBI is too, is to postpone the initiation of that corporate activities tax for at least a couple quarters, so businesses who are obviously struggling from this crisis don't have to pay that as well. So we're pushing hard on that piece of advocacy, and there's a handful of other ones that we really appreciate what OBI is doing for everybody.
Thank you.
All right, thanks everybody. Have a great afternoon, and we'll be back in touch soon.
Thanks.
Thanks everybody.